Hey everyone, Mike here from Equity Sense. Let me talk to you about our scalping class. Now, this idea came from a client who asked about getting a simpler technique to just be able to scalp, the S&P or the Dow Jones. Actually, it was initially for the S&P. Before I continue, I just want to remind anyone who's watching who is a former student, if you've already learned the futures or the S&P class from us, or from us, you don't need to take the class because you've already been taught this technique. So this is just the simplification of the technique you were taught. So you would know what I mean if you took the class for sure. So I'm not gonna go into greater detail, but you know what I'm talking about. So this scalping, if you don't understand what scalping is, it's just a really quick trading um, activity. Meaning, you go into a trade like say the S&P, you go in at at a certain level and you get out at 1 point or 2 points. Scalping is a range of things, but the major definition is you're in with some significant number of contracts and you get out after a few points. Even if just 1 point, it still doesn't matter. At the end of the day, scalping is the pure form of day trading. Day trading is you're in a trade and you get out before the day ends. Scalping is sort of like the shorter version of that. You're in there for maybe a minute, maybe even less, if you're lucky. If you're not so lucky, you're probably in there for half an hour or even an hour, right? So that's what scalping is all about. So the idea is that this client was trying to look at videos on YouTube. There's a lot of people on YouTube that teach or try to teach scalping. I can't really say if these guys are all legit or not because obviously, number one, I haven't really taken their class. And number two, I don't know who they are. So I'm not going to be here to tell you guys or trash talk these people and say these guys are scams or not because I don't know. But ultimately, this guy came to us seeing our result in terms of our trading and decided, you know what, I want to learn how you guys trade, which is, again, those who are clients know that when I trade, or even when Gavin trades, we're in there for like 4 or 5 points, even less. Sometimes I'm in there for just 1 or 2 points. Depends on what I feel and what I think the market is going to do. Sometimes it's not correct, but at the end of the day, I'm in there just to make money, and that is the whole point of doing this, right? Just to make money. So what is scalping in terms of the Dow? So the Dow futures, the tick size is 1 point, and 1 point is equal to $5. That's the $5. That's a dollar value of a tick in the Dow. Whereas the S&P, one tick is a quarter point, and it's equivalent to $12.50. So in terms of being able to get in and out of trades, the Dow futures gives you more flexibility because you can get in and out at each point. And if you don't have a crazy broker, you should be able to get out with at least break even if you only make one tick really on the Dow, right? So my broker charges me $1 per contract. So obviously, if I trade with one contract for the Dow and it moves $5, I'm going to be making net about $3 on that trade, right, round trip. So the Dow futures is good because it actually has enough movement and the volatility is wide enough that you'll be able to take advantage of the trade. So this class is essentially for the Dow, the S&P, and of course the Nikkei. Now they're not the techniques on the Dow and the S&P are similar, and the Nikkei is completely different because the Nikkei is a different beast altogether. The tick sizes and all that are all different with the Nikkei. So be very aware of that when you're looking at this class. So again, what is the goal of this class? Just to be very clear, I know it's been a few minutes already. We're in here to try to scalp 10 points off the Dow per trade. So that's the scalping, right? So you're in there, trade with a minimum, okay, with a minimum of 5 contracts, and we're trying to squeeze in 10 points, which is very doable. Those of you who don't know what the Dow looks like or what it is, go and look up YM. If you're a futures guy listening to this, obviously you know what I'm talking about. If you're a stock guy and you don't know anything about these things, you're still more than welcome to come in and take this class. Just remember, it's not applicable to the ETFs and the stock world. This is just only for the futures. This is important why I have this requirement here. You have to have a futures account. Unless you're gonna have to get approved, you have to have enough money to be able to afford 5 Dow futures. So contracts. So that could to be safe, you need $25,000 to be really safe. Um, you must have an after trader order book interface. So what that looks like is this right here. So you have to have this kind of thing because you can already set your stop limits and your target profits and all that stuff. So everything is automated and it's quick. You're not gonna have to keep going clicking buy and sell, and that just takes forever. This one is it's basically one click. You set your order, it automatically transmits your order to get in and to get out. So the DAX is a good example as well because the DAX does move 1 point each time. Actually, quarter, 50 cents, actually 0.5 points in terms of its increments, and you can actually still maneuver your trades much better too. So this kind of interface. So if you have Thinkorswim, you're already good to go as long as you have a futures account. Thinkorswim does have this interface. CQG Trader has it. NinjaTrader has this. MetaTrader has this. Interactive TWS broker has this too. So you got to check with your broker to make sure. Just tell them, do we have an order book interface? And if they say yes, great. If they don't know what you're talking about, then they're probably a horrible broker, and you probably want to move on. But they should know what you're asking them. So the class is only going to be 1 hour long. I'm expecting before you even join in, you already know or have a good understanding of candlesticks. That's really all the requirement you need. As long as you're comfortable looking at charts, that's pretty important. We'll be using either an SMA or an EMA. I'm not going to divulge which one, obviously, but this is not to be a trigger, meaning you're not going to use we're not going to use the SMA or the EMA to start our trades. No, 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 no. This is not a simple SMA crossing kind of technique. No, no, no. We are using that to guide us for the trend, meaning if we take a trade, if the SMA is still giving us a good idea, then we can keep on staying on a trade. We're going to be using a 5-minute chart. So if you probably have watched some videos on YouTube, they're using 1 minute, 2 minute, 3 minute, 4 minute, whatever minutes. Our technique is 5. And again, and of course, this is probably the best part, which I hope they are telling you if you took some other person's class. They give you the best hours to trade, meaning these are the times of the day that you should be trading, rather than be like just pick a random hour and take the trade, because then that's not going to work. So extremely important. The average trade length is about 5 minutes, meaning when we get into a trade, typically we should be out of it by 5 to 10 minutes. So depending on what your daily profit target is, it depends on what is important. But if we're aiming for 10 ticks or 10 points on the Dow for a profit target. So 10 points is $50. If you trade with 10 contracts, that's $500. Subtract your commissions, you'll probably make $450. So the idea is if you can repeat that, right, twice maybe, you'll make $900 for the day, and that should be it. Or you could probably do more and go from there. So like I said, we're giving you the hours of the day to trade. We'll let you know which ones are the best parts, and you trade from there. So this isn't essentially, we're not trying to make you a millionaire overnight. That's not what it is. This is trying to make you into a day trader that you can strategically time your trades so that you are at the most efficient and most liquid time of the market. Okay, so this is what it's all about. And if you have questions, please let us know. Contact us. Go to the website www.equities.com and let us know. We'll be more than happy to help you. So you got, again, 3 different versions to take here. You got, if you just want a video version, if you don't want me to instruct you or teach you, it's only $1,000. If you want me to talk, it's $1,500. If you want me to talk plus having 2 live training sessions with you, it's going to be $2,000, right? So it's not bad. The fact that if you can afford, like I said, 10 contracts, and if you are able to follow the steps properly, right, you will be guided. Give or take 4 or 5 trades, you should be able to get back the tuition on this class, right? So let me know or let us know if you are interested, and we'll be more than happy to work with you. Make sure you understand the concepts and all that. I like this class because it's a very, very simple class to teach, and it's not going to waste your time and my time. It really is efficient and it's very, very quick, and the investment cost for you is really, really manageable and low. So let me know if you're interested. It's a very, very, like I said, I'm very flexible in terms of time. And again, if you want to study on your own, obviously you can go do that. Again, the video version, all of these things do include notes, and of course, if you're going to take the instructor-led class, it's still going to be 1 hour. Don't get me wrong. Nothing's going to change. It's going to be recorded. You're going to be the only one who has access to that recording, and all that. So this came from a client, and I'm going to be teaching him, I think, this weekend or so, just once. So it's only an hour, and it will be a very, very quick session. We'll probably have a lot of fun just kind of understanding this, and hopefully, it's going to be good. As sort of as an example, I've taught somebody 2 or 3 years ago through our foundations class, and he is now a tick trader. Basically, he just tries to trade 1 or 2 points out of the S&P, makes his 700, 800, or $600 a day, and that would be it. He trades about 10 contracts, 12 contracts in the S&P every day, and he tries to make his 500, $800, and that's it. So he's living off of like $15,000 a month or whatever it is. Why is this more efficient than the others? Because you're not waiting, and secondly, the volatility is there to really give you that chance to get out of that trade, because the minimum swing of the S&P, for example, is 1 point, which is the same as 10 points on the Dow, right? So give or take, you should be able to hit that profit target quite quickly. Okay, so thank you for your time. Take care. Hope to speak with you guys soon, and bye for now.